Good morning and welcome to the Killik & Co market update. This week we've been having a look at UK retailers given that today is Black Friday. It's been a really difficult couple of years for some of these retailers, firstly because of the pandemic and now because of the cost of living crisis. Here we've got the volume of UK retail sales over the last 3 years, and you can see that big drop in the first lockdown and then another drop in the lockdown that we had at the end of 2020 and then a gradual decline over the last year as people have cut back on their spending. Shares in UK retailers have performed poorly this year, and here are some examples. We've got Marks & Spencer down 45%, Next is down 30%, ASOS down 73%, and Currys down 27%. What's really interesting is to compare the volume of what's being sold with the value of what's being sold. On this chart, we've done this for food stores. The green line shows the value of sales, but the pink line shows the volume. And you can see that people are spending more, but getting a lot less. Although many areas of retail have really struggled over the last couple of years, there have been a couple of bright spots, including luxury retailers. These have been quite resilient and they have been able to pass on higher prices to their consumers without negatively impacting their sales. We have got a luxury retailer on the buy list, so please do give us a call if you'd like to talk about this in a bit more detail. This week, the UK government's borrowing figures for October have been published. The number came in at £13.5 billion, which is a big number, but it's way below the expected number of £21 billion. One of the reasons the borrowing came in less than expected was the fact that October has been much warmer than it normally is, and therefore people have had their heating on less, and that means the government has had to spend less on energy price subsidies. Getting our borrowing under control and bringing down our overall level of debt should be good news for confidence in the UK economy. That should be good for the value of the pound, and also it should mean that over the longer term, the government will have to spend less on servicing its debt. We'll be keeping a very close eye on these numbers over the coming months as the weather turns colder and as people will need to put their heating on more, which may push up the price of the government's energy subsidies. And finally, Disney shares have had a nice rise this week following a surprise announcement about the return of Bob Iger as chief executive. Mr. Iger became the chief executive in 2005. He did that for 15 years before becoming chairman, and he stepped down from that role in 2021. The share price has performed very poorly since he left the company, and there is now some hope that he could turn it around. He's viewed by many people as one of the most successful leaders in history, and he's responsible for the acquisitions of Pixar, Marvel and Star Wars, which have really placed Disney on strong footing in terms of content. For anyone looking for a new book idea, I can recommend his book, which is called The Ride of a Lifetime. Moving on to have a look at next week, we've got results coming out from Intuit, Diageo and Salesforce. That's it from us. Enjoy the weekend, and we'll see you next Friday.